Hey everyone, we have a lot to talk about. It's a beautiful Monday here. We have 4 central banks announcing interest rate this week. We have Australia, Bank of Canada, Switzerland, and the US. They're all going to announce some pivotal changes in interest rates. For the most part, we already know what's going to happen with those 4 central banks, but it is the reaction, the stuff after the fact that really moves markets. That December rate cut for the US is already priced in, so we already have that on the back of our minds. We do have a new chairman coming in as well, but yields are rising today. We'll go ahead and unpack that. The dollar also bouncing off of that pivotal 38.2% retracement level that we discussed. It's holding up tightly there. I'll unpack it all in today's video. It's a beautiful Monday to go ahead and talk markets. Let's go. There was an interesting slight pop in the VIX here today. We did go up 8.25%, but we are still below that 200-day moving average. In my opinion, anything above that 200-day moving average in the 20s here is problematic. Staying below it, not too much. We will go ahead and monitor the VIX, see if it go ahead and chug higher here as the week progresses. We do have a big week coming up. We have the 4 major economies announcing interest rates. We have the US, Bank of Canada, Switzerland, and Australia as well, coming out with interest rates. So we'll go ahead and see how that comes up. We do have stocks approaching these all-time highs here. I do expect a little bit of a stall leading up to that FOMC day. Usually that's what happens as markets are pre-positioned, and then any surprises, anything after the fact will go ahead and give us some decision. If we do see some hawkish tonality, I can expect for stocks to have a little bit of a pullback here. But if we do get a dot plot and it does show that more interest rates are to come, we can definitely see new all-time highs in the stock market. The dollar index is now holding up at that 38.2% retracement level that I've been watching for some time now. I did say that I want to see the US dollar go ahead and tumble lower to get more of a discount relative to where it's at right now, and we're holding there, so perhaps we can see a chug higher. I do anticipate that the dollar will go ahead and show some stalling here. Same thing with the stock market, just waiting for some clarity until after the Wednesday Fed day. But if we do see some hawkish remarks, we will go ahead and see the dollar go ahead and appreciate here, and then the real test for bulls will be that 100 handle. If we go ahead and surpass this level, then we can see a bit of a break, a retest situation in the US dollar, and then we'll be free and clear of this resistance level, and then we'll go ahead and see where we can go, perhaps at 102 level. But once we get there, then we can go ahead and look further into that. But for now, dollar is trading at that 38.2 retracement level. We gotta go ahead and see what Wednesday brings us. We'll react from there. Interestingly enough, we do have the US 10-year yield trading higher today. So intraday, we did get close to that 4.2%, and then we flushed below here. So we're holding up. I'm curious to see what happens with the US 10-year yield. Perhaps that can be a leading indicator as to what the bond market thinks for US interest rates. If the dot plot does show that we have more interest rates on the horizon, and that is in line with the overall, macro fundamentals, then we can see US 10-year drop like this and break below this pivotal level here. In that case, I will be positioned more dollar bearishness. I'll trade that alongside the DXY, somewhat correlated. Australian dollar, one of the central banks that is coming out with an interest rate decision. It did poke above here, and then we are trading here now, so perhaps this is a break and retest situation. The RBA did say that they are done easing in their cycle, and they're potentially looking to raise interest rates, so we'll go ahead and see how that unfolds. If that is the case, then we can trade Aussie dollar probably up into these highs as well, and then we'll go from there. Aussie 10-year yield is trading higher as well. Pretty good run here for the Aussie 10-year yield, so we'll go ahead and monitor that. We did break this level here. My eyes just looking at this just now. This level here. If we go ahead and bump up and break out, if we do get a hawkish RBA, then these highs are next target here as well. Canadian dollar, a bit of an underdog story as well. We did get some good prints as far as labor data for Canada. This is a pivotal resistance zone. Again, we spiked up tariff announcements. Now we traded below, and it seems like we poked below here. So perhaps we can see a bit of a more downward cycle for USD CAD. Great layer of confluence that we can add to an already performing Canadian dollar. Switzerland, another great chart here as well. We do have the 10-year yield for Switzerland trading at a premium here at 2.48%. Perhaps we can get back into the zeros where Switzerland interest rates are currently at. Dollar Swiss, the currency pair, it is trading annoyingly in this range here, but this is probably one of the trades that I'm going to have on my horizon. If we do get a semi-hawkish or cautious Fed, then I can see the potential that the dollar Swiss is going to break this level here. We're going to trade higher and perhaps get out of this range. We've been range bound for a very long time here, so that is one thing that's on the horizon for myself. I would love to see that break out to the upside in dollar Swiss. Reason being, inflation in the US is pretty sticky at 3% still. So I do think we will get a semi-hawkish or cautious Fed coming up in the meeting, regardless of the upcoming Fed chairman that is dovish. CPI is at 3% sticky here. So until we see a little bit of a pivot as far as CPI, I do think that the Fed is going to voice that they're going to be cautious. Last time we got to 2.4%, we did get sticky and we traded higher. Until then, we got here to 2.4 or 2.3, and we are now trending higher as well. Now we're kind of flatlined here, so perhaps we'll see if we get that, step to the downside, then we can see rates go ahead and follow suit with that as well. So for now, the chart that I'm going to be prioritizing is dollar Swiss. We have been trading in this range around here for some time. I do expect a bit of a cautious or hawkish Fed. Perhaps that can give a rebound into the US dollar. We do have the 38.2% retracement level holding here. We do have the 10-year yield for the US dollar trading higher as well. Those confluences, I do like that. We do have the Swiss bonds as well trading at a premium. So perhaps if that corrects itself, that can be another layer to that confluence. When I'm trading, I want to have as many layers of confluence as I possibly can that are in my favor. I do think that dollar Swiss is a trade that I'm willing to go ahead and look at. We also do have positive swap for the dollar Swiss. So given that the Swiss is at 0% and the Fed is at 4.5 or going to be at 4.25, if we get that 25% basis cut, we still have a very healthy positive swap. So regardless, I do think we put the floor in whenever we were ranging here. This was probably a bottom out for the dollar Swiss. We will see though, things can change. The landscape can always change. If we get a very dove Fed, then we can go ahead and get back to the lower bound of this range, but we'll see here. I don't mind holding dollar Swiss for a very long time just because of that positive swap. So that's one thing that I'm going to be watching. And of course, I will let you guys know as the week progresses if I place a trade or not. Thank you guys so much for watching. I truly appreciate it. Hope you guys have a blessed rest of your day. And like always, trade safely. Bye-bye.